The market trades down into that first presented fair value gap, which is the wick right there. What it does, it opens, trades up, and then down to the low of it and just outside of it. And then the next candle we open, let me make it a little bit bigger here. She loves that. Opens, consequent encroachment, sells off. And then what's it reaching for? Relative equal lows, sell side that doesn't ever get swept. That's a myth, right? The market doesn't do that stuff. And then trades down to 260, 25, 260, which was what I gave you as an objective earlier in the morning session. Rallies up, comes back into old order flow here. What is this? What's all this business? Small little consolidation, right? When you look at a consolidation like this and you don't see any fair value gap, what do you see? You see a wick, don't you? See this wick right there? That wick right there is the last one that was going up in price before it dove down. When we trade back up into this, this acts just like an old high. So you want to grade that. We only want the half measurement, okay? So that's consequent encroachment. We don't need the high and the low. That wick right there tells you the whole story inside this consolidation because there's no fair value gap. It's important because when price was down here, that's your premium array. So it can come all the way back up into that range to that halfway point, but it cannot breach it by body. Tell me I'm making it up as I go because that's the same shit I'm telling you all the time. It's always that. It's always that. If it were to close above that right there, that gives the allowance for continuation on the upside. Go back and look at your notes. Look at every time I've ever mentioned the wicks in deference to what we're showing you here. Look at the bodies. Can't get there. Yeah, we'll touch a little bit and then boom, run away. Your volume profile said shit, nothing about that. Supply and demand said nothing about that. No pitchforkers. stick a fork in an ICT and twist it. That's logic that's outside of everybody else's stuff. That's real order flow. Chris Laurie's never even okay? Done. Dusted. Period. Larry Williams never considered it. Gann never had anything to do with it. Come on. Come on. Tell me where I got this information from. Tell me where I got that logic from. Come on, tell me. Excuse me. You'll be wasting your time. But there's $5 million waiting for someone that can prove it. Well, it's never happened. The market dumps, trades outside of the low of that suspension block, trades one more time up. What's it trading to here? What's occurring here? Look to the left. Slightly higher high at a time when it should sell off. Small little separation right there. This is micro market structure. You can drill down in all this right here on a 15-second, 30-second chart, and it'll become much, much more cleaner to you. But this little separation right there, that's inversion. Carry that over. That's what the bodies are respecting there. And then it sells off. Same thing here. See that? Inversion. Look at the body staying inside of it, inside the separation right there. Sells off multiple times, touching the low of the daily suspension block. Nobody else would have had that daily suspension block annotated in any of their logic or their bullshit religion in terms of technical analysis. They would not have this box or the low of that level. They would not have that highlighted. There's nothing on the daily chart that would indicate that's a reason to have a level there. But why is it doing all the things I teach? Look where it's below it here. The bodies can't even touch it now, but the wicks are being offered to it. See that? Inversion fair value gap. The bodies are telling you it's getting ready to dump. How do I know that? Look at my old recordings of my executions. When I'm writing down, I'm expecting range expansion to the downside. I want to see large ranges right now. I want to see speed and magnitude. That's the secret I'm using when I'm doing it in live executions.